Make your money work for you. Top 5 ways to save and earn in 2025. Welcome back to the channel. Today, we're diving into the best ways to save money and earn interest. We're talking about making your money work for you. If you're tired of seeing your savings lose value because of inflation, you are in the right place. We're going to break down the top 5 ways to make your money grow passively so you can sit back, relax, and watch your wealth build over time. So grab a pen and paper, get ready to take some notes, and let's get started. High-yield savings accounts, your secret weapon to beat inflation. First up, we're starting with the basics, high-yield savings accounts. Traditional savings accounts at brick-and-mortar banks usually offer pathetic interest rates, like 0.01%. But high-yield savings accounts are different. These bad boys are offered by online banks, and they often have interest rates that are 10 times, 20 times, even 50 times higher than traditional banks. And the best part? High-yield savings accounts are incredibly safe and liquid. Your money is FDIC insured, just like it is at a traditional bank, and you can access it easily whenever you need it. Bonds, the set it and forget it. Investment for steady growth. Next up, let's talk about bonds. In simple terms, a bond is like a loan that you give to a company or government. They borrow your money and agree to pay you back with interest over a set period of time. There are different types of bonds available, each with its own risk and return profile. You've got government bonds, which are considered the safest, corporate bonds, which offer higher potential returns, and municipal bonds, which can provide tax advantages. The key with bonds is to diversify. Spread your money across different types of bonds to minimize your risk and maximize your returns. Now, if you're looking for a way to earn a guaranteed interest rate for a specific period of time, then you need to check out certificates of deposit, or CDs, as they're commonly known. Think of a CD as a time deposit. You're essentially lending your money to a bank for a fixed term, typically ranging from a few months to several years. In exchange for locking your money in, the bank rewards you with a higher interest rate than you'd typically get with a regular savings account. The longer the term of the CD, the higher the interest rate you can typically earn. It's like setting your money on autopilot and watching it grow. Now let's move on to something a little more exciting. Peer-to-peer lending, or P2P lending for short. P2P lending platforms like Lending Club and Prosper connect borrowers directly with investors, cutting out the traditional banks altogether. As an investor, you can browse through various loan listings and choose which ones you want to fund. You can diversify your investments across multiple loans to spread your risk. And because you're lending directly to borrowers, you can potentially earn higher returns compared to traditional savings methods. Of course, like any investment, P2P lending comes with risks. Borrowers may default on their loans, so it's important to do your research. Assess the borrower's creditworthiness and diversify your investments. Finally, let's talk about dividend-paying stocks. Now, I know what you're thinking. Stocks? Isn't that risky? And yes, stocks do come with higher volatility compared to some of the other options we've discussed, but they also offer the potential for higher returns. Not only do you have the potential for your investment to grow in value over time, but you also receive regular dividend payments, often quarterly, just for owning the stock. Think of it like owning a piece of a rental property and receiving rent checks every month. The key to successful dividend investing is to focus on companies with a solid track record of paying and increasing their dividends over time. Look for companies with strong financials, a history of profitability, and a commitment to returning value to their shareholders. So there you have it, folks. My top 5 ways to save money and earn interest in 2025. Remember, building wealth is a marathon, not a sprint. Whether you're just starting to save or you're already on your way to financial freedom, I hope this video has given you some actionable strategies to make your money work harder for you. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more tips on managing your finances. See you in the next video.